Look, domestically, I think it's very much kind of, to use a phrase, as you were. Speaking to CEOs domestically, there's no doubt the market and the economy is starved of revenue growth. So I think we've seen a lot of the stocks and companies that operate in segments of the economy that are exposed to consumer or business confidence are still struggling to get revenue growth. Thankfully, we are seeing the delivery of significant cost outs, and that's been a corporate strategy for 2 years in Australia. Having said that, they were 3 years behind America, who started cutting almost immediately back in the GFC. But we are seeing the cost outs, and I guess what the issue going forward is that we will need that revenue growth to chime in, and everyone's aware of this. That the costs can only go so far. The bit that the companies can't control is the revenue environment, and that's clearly quite subdued. As a result, we've seen anything with revenue growth has been re-rated materially, and in some instances we think some very good stocks have been left behind, and that obviously is an opportunity for investors. Yeah, sure. Look, I think there's been the high growth element and segment of the market has really re-rated, and I think for us there's been two stocks that have been in our portfolio for close to a decade now, and that would be Iris and Invacare. Now these stocks are actually quite expensive stocks. You pay up for them. That's because they're very high quality businesses, and if you actually look at what they've done in the last couple of years, their PEs haven't really re-rated. They've actually grown. Their share prices have moved mainly because of the earnings growth they've delivered, as opposed to other stocks where you've seen significant PE ratings above and beyond their actual earnings. And so we felt coming into reporting season that some of these very high quality, traditional, what I'd call traditional small cap stocks, had been a little bit left behind, and we think those two stocks are very, very well positioned to deliver good, solid growth for a number of years. They're businesses that are in very good shape, with good management teams, with very strong market shares, very strong business models, and at the moment they're playing a bit of catch up. So Invacare is probably up 10% post reporting. Iris is up about the same. So they've been two good performers for us, but we really think on a 12 to 24 month view, investors can have a very good time owning that kind of a quality business you can really touch and feel, and where these stocks have really, really significant market shares in the fields they operate.